let's kick this off. I mean, we all know that data is crucial for both decentralized networks and traditional finance systems. The current challenges we see in the industry include siloed data, inconsistencies in data, and varying latency profiles. This panel will explore how seamless on-chain data flows would look like, data flowing between blockchains and traditional finance, as well as how AI will enable real-time insights, automation, and improved decision-making. Chris, Tradeweb operates at the intersection of liquidity, data, and execution, one of the largest fixed income marketplaces in the world. It was announced you're bringing US Treasury closing prices on chain via data link. Just this morning at 8:03, I was clicking through. Amazing, thank you so much. Great work with you. How does bridging real-time on-chain data with traditional market data feed enhanced price discovery and transparency?
Great to be with everyone, Frank. I hope everyone can hear. This is the first time I've had the headphones.
It's a little odd, right?
New experience for me. We were really excited by today's announcement, and I think the ways that the data is super important to what's going on chain is we have to have super solid data to foster the new things we want to do on chain. And so we were really excited to get the FTSE benchmark prices out for closing prices of treasuries. We're actually excited to now challenge and see what people do with that information, because to transact, especially institutionally on chain, you need a lot of precursors to work, right? So we're used to at Tradeweb just sort of getting an order and only worrying about secondary trading, and then we do an execution, and we still think that that will be super important even in the on-chain world, that you'll actually be migrating for certain functions for what's the stateful information I need to see on chain, but then maybe I route to a trading platform to actually get a trade done. And then something's going to come back to the chain to statefully show, okay, what now happens post-trade? And so at each leg of what happens on chain, it's really critical that you have perfect data because you don't have humans in the loop anymore.
That's right.
So I think that's a really important concept, is the more that you want to do on chain with the whole pre-trade to settlement workflow, the better data you're going to need to power those chains. And so at Tradeweb, we really pride ourselves on having super high quality data for the markets we trade. And so now that said, it's also, you have to think about what the knock-on effects are going to be, right? So our Tradeweb treasury closing prices, they're benchmarked administered by FTSE, Kristen's organization. And so we think that's a perfect closing price to use for a lot of different functions on chain. But we're actually going to have to see, once that happens out there, like, does the mechanism itself have to adapt once it is on chain and once you're doing more with that? Which I think is going to be a super interesting evolution to witness.
Amazing. Yeah, and you mentioned the loop, the data that flows through cap markets, and obviously now also on the blockchain. That could be described as a data continuum, and I want to throw it out to all my panelists here. How do you find the context of the concept of a data continuum in the context of cap markets, and why does interoperability sit at the center of it? And
yeah, I know. I'll start. When I think of data continuum, I think of it as being the seamless transition of data across the life cycle of trading, life cycle of capital markets activities, from issuance to trading, investing, clearing, settlement, and post-trade, and the ability for data to just move unbound by systems and cutoff times and sort of regulatory barriers or cross-border barriers. Challenge is that that just doesn't happen. For all the years that I've been in the capital markets, which is getting to be about 4 decades now, that ability for data to move across the life cycle events is just something that is, in point of fact, not seamless and not real time, and challenged in doing it across systems and across borders. It's defined by separate duplicative operating silos in between all of the organizations that are touching that data or using that data, whether it's someone that's an actual owner of it or an organization that is serving as an agent or as a services provider to them. So the reality is it's fragmented, it's siloed, it gets broken up and appended and changed, and entire industries exist to do nothing other than reconcile that data over time. What interoperability does is it restores that continuum. Maybe it enables the continuum where it never previously existed, but it restores that data continuum by allowing data to move with a level of certainty and accuracy, and I'm not sure if the right word is agreeability, meaning that the parties that acted on that data or own that data have agreed it to be factually accurate and correct. And that's what interoperability does. It breaks down those separate duplicative silos, allows for data to flow seamlessly across whatever the transaction may be, but ultimately end to end across all types of capital markets activities.
I'd love to jump in on
Of
this
course.
one. We also had a press release that went out on Monday that we're now working with Chainlink to get all of FTSE Russell's traditional data on chain. Long time coming, very, very excited about this, and it plays into all of this interoperability discussions that we're having. And I just always think about, like, when a friend of mine will ask, well, what do you actually do? I'll say, I'm a financial plumber. We're moving data around, right? And it's really hard because everybody has legacy systems that are different. And I think we also all know when you're blending TradFi in this new world that we're moving into, we're going to be in a multi-chain world. So how are these different blockchains going to talk to each other? This plays into interoperability, but I think a lot of the solutions will come from getting our chain or our data on chain with Chainlink and kind of figuring out where the standards are going to be set. Is there a blockchain where you're going to say, hey, I want the Russell 2000, where am I going to go find that? And will that blockchain then talk to the next blockchain for whatever application it might be? We're all figuring this out together right now, so I think it's super exciting, and we'll just see where this goes.
Interestingly, this continuum for us is really, as Kelly mentioned, like specifically how do you link up various pieces of the workflow. And so, one of the things that we were really interested to be involved in the last few months is tokenizing treasuries to then be able to do repo on chain. And this is mostly happening on the Canton network, but I think there, to Kristen's point, it's going to be a number of different chains that have to interop and connect for various functions or for different reasons. Like I need super high performance and high transaction or data flow over here. I need privacy and local scalability over here. So, we're really interested to see how that comes together. But, I think we're at this point now where we have really practical production use cases for clients that need to do new things. And so in this case, we were excited because it's actually crypto liquidity providers who want to tokenize a treasury, and then actually it's an existing piece of collateral that sits with their prime brokers today. Right? So these aren't new digital forms of collateral. But how can we get that collateral awake on chain and then service our funding needs with a stablecoin? And so that's where, we can see a lot of really cool things coming on concept with existing trading capabilities like our repo trading platform with on-chain services. But I think as that evolves and you start to think about collateral with clearinghouses and exchanges in your prime broker, you need to mark all those instruments in real time too.
That's right.
So that's where I think we kind of come back to, well, what are you going to use? And so it's got to be pretty specific. It can't be some new market. It has to be something that kind of has the legacy heritage of all the liquidity in the marketplace. Mm-hmm. And so that's what we think there's real use cases going on now. And that's what I think we're just at the super beginning of that evolution.
Mm-hmm.
Thanks. Reza.
Perfect. Thank you. So first, before I start, I think Deutsche Börse as a company is maybe as a brand not so well known. There are a lot of brands beneath it, like Eurex Derivatives Exchange, EEX, the energy exchange, together with Nodal, which is also active here in the US. We've got Stocks, which is also an index provider like FTSE. We, of course, have the cash market with equities in Germany. And I'm responsible for actually distributing and commercializing all of these data assets within the group to the capital market space. And I think if we think about data continuum, for us, of course, these very, very different asset classes is one topic that is very, very important to have in mind because they are very, very different in customer needs, in the way also latency works, and also in the way that our partners interact with us. And I forgot 360T, our FX platform, which is really, really important in that context as well. And for us as Deutsche Börse, if we think about digital assets and also data continuum, data is always a seed for many of the capital market operations that we have, from issuance to post-trade. everything is in some way connected because, as you said it, data is the key ingredient to make this flow correct. And that's also why we spend in the TradFi world millions and billions for reconciliation and cleaning and the plumbing that actually is necessary to get things right. And maybe for me, if I think about this data continuum topic specifically in the connection of our works with Chainlink, is that Deutsche Börse has now a real ambition to become a real player in this digital ecosystem because of the investments that we've been doing from issuance, as you said it, to trading, to clearing, to custody. And with, for instance, Clearstream also being part of Deutsche Börse, which is a big post-trade player, and in crypto finance, also a company which we acquired a couple of years ago, being a custodian and broker in the crypto space. We, I think, have a lot of ingredients to make this data continuum a really, really great play across the whole value chain. And that's for us at the end the game. And I mean, we're going to talk a lot about, let's say, the on-chain world and the corporation with you, but I think maybe seeing it this way, multi-asset class across the value chain, that's what we really have to focus on if we think about interoperability in this data continuum.
100%. It's an ecosystem that we have to maintain and connect and expand. And that, in my mind, on-chain finance is a logical extension of an existing ecosystem that relies on data flowing effectively at high speed, with low latency, with high accuracy. That's the key thing, the data reliability. Now, talking about that, while I have you, and now you have a functioning microphone as well, which is great. What are the biggest technical hurdles in your mind around governance, compliance, that enables that seamless flow and enables interoperability between a blockchain system and established traditional finance markets?
Of course. So, I mean, as you probably all know, every data content provider, as we all are here, is actually using intermediaries to transport data that we have to the whole capital market space. And I mean, vendors are playing a whole, let's say, role in this. I mean, we had S&P in the panel just before us, but of course, there are a lot of key players that also take this data directly, and I mean, they are sophisticated enough to do this in the TradFi and also in the let's say DeFi space. But I think what is important to understand is that I think this key role, like a Bloomberg or an LSEG or X-Refinitiv has been playing in the capital market space, does not exist in the on-chain world as we see it now. Chainlink could become something like this going forward, specifically because of your role in many of the different environments. But for me, one of the most critical aspects actually is how do we transport institutional grade data in the latency that customers need? And then sometimes latency doesn't play a role at all. But how do we do this kind of interconnectedness between the TradFi and the DeFi space? And there, it's actually not so easy. I mean, we see it now with Chainlink. How do you transport the data? It's still the classical routes, the cloud, and we need connectors. You need to pull it from somewhere, need to take it through your nodes, and then publish it somewhere in the on-chain world. And then there is the topic, which blockchain, because I mean, you're not everywhere. So I think for me, the main topic is that interoperability will be really, really hard to actually establish because we've taken a lot of decades in the TradFi world to make this work smoothly. And a lot of investments have gone through this with all of the different steps in the capital market that we have to make this a reality. And I sincerely believe that it will take at least 5, if not 10 or 15 years until we have this TradFi, DeFi interoperability, which we have so seamlessly experienced in the capital market space. And I really hope that you will play a key role in this, because the smoother this interoperability works, the better also the use cases that we have will take fruit. Yeah,
it's our ambition to be that tech layer that enables that seamless data continuum, pun intended. Now, going back to another really important part of like the world of traditional finance, the world of indexing your investments against benchmarks, index construction, benchmarking, another area that relies on accurate standardized data. And FTSE Russell is one of the most renowned platforms that does that. So how does on-chain data impact the way FTSE Russell approaches the digital asset indice market and the according analytics,
Yeah.
Kristen?
I just want to start and make sure everyone knows what we're doing in the space. So FTSE Russell has been calculating 500 crypto prices since January 1st, 2019 in real time, and we have official hourly fixes that are used across the world. It's been fun. I can't believe we've been doing it for 6 years already. And then the other side of our business is, of course, our TradFi index series, and you would know names like the FTSE 100 and the Russell 2000. And where we're spending a lot of our time today is in this whole chat about tokenized funds. So if we're going to start seeing our traditional clients who are asset managers who license our indices to run financial product, they really want to start doing this in a tokenized world. So they'd like our index data there, because if you are in this permissionless, trustless environment, you need to know that really is the tokenized version of the Russell 2000, and they're tracking the benchmark, because that's what your management fees, which will still be wrapped up in these tokenized products, will be paying for. So we're working, again, with Chainlink to get some of our data into these different environments where you're seeing these tokenization platforms come up, and then we're doing this idea of a proof of index so that you know the value really is the value of that tokenized product. And I think that's fantastic, big steps. I think everyone here probably also heard that BlackRock made that announcement that they plan on tokenizing all of their ETFs. So what happens for everyone sitting on this panel is we have to figure out how do we get our pieces, in line, so when they want to do that, we can do it all really quickly. So.
Awesome. Thank you for that. And again, it's going back to data enabling an ecosystem and its expansion into like different use cases that exist on-chain, off-chain, and they're interoperable. So talking about that, Kelly, now a question for you.
Sure.
Digital asset has long focused on interoperability through DAML and shared ledgers. So what lessons have you learned about enabling data, portability, and consistency across networks without sacrificing privacy or control, which is obviously a key element of traditional finance?
Oh yeah, for sure. So we've been at it for 10 years, so many lessons. We could probably spend all day talking about it, but I'll share a few that are sort of headline thoughts as we have built out DAML and Canton, the network that actually uses it. So first, I would say go where the value is obvious. What I mean by that is, so much of the industry, whether you think of crypto, but really even just focusing on TradFi, is ripe for opportunity to get data more available to support more decision makings across trading and investing activities, everything that Kristen was actually just talking about. But Chris had just referred to one of the transactions that we're focused on, which is getting the real world assets, the high quality liquid assets that are around the globe. There are about 270 to 280 trillion of them, but only about 10 or 11% at any point in time are available for use to move across borders for margin, collateral, and the like. So even before you get to some of the interesting newer types of products and services that will undoubtedly be enabled with crypto activities and where the intersection of DeFi and TradeFi meet, there's plenty of wood to chop just in getting the assets that exist in the capital markets today more mobile, more real time, more unbound by the settlement times and cutoff times. So go where the value is obvious. The second thing I would say is sort of anchor the legal title and share the state. And what I mean by that is when I first came into the industry, there was so much conversation about, well, first let's get rid of all of the custodians, and there's not going to be any more transfer agents, and all the intermediate, every investor and issuer are now going to speak with each other, and the world is going to be wonderful. But that's not going to happen. The reality is in the case, I mean, maybe it will someday, but at least for right now, as a more practical approach to it, there are investors in the world who rely on the fiduciary responsibilities of their various agents. They, I joke and I say the Ohio teachers don't wake up every day saying, oh, good news, I can now manage it all directly because it's digital. They still want these services. So think about anchoring the legal title with service providers that can very clearly delineate ownership as it increasingly moves real time, but allow for that shared state on the status of data and the records of what's been happening to it. That actually moves freely across applications and transactions. Third one I would say is synchronize the workflows not big data dumps. And what I mean by that is focus on synchronizing the workflows and the data as it's transacting, as it's happening across the different multiple parties and the different jurisdictions and the different applications using it, and having that shared state that I referred to a moment ago. And divorce yourself from this mindset that we've had in capital markets for so long of, first let me get all those transactions done, and then let me figure out how to reconcile what I have versus what you have. This is where I think the work that Tradeweb is doing in the space, in Canton Network, but more broadly, to be able to bring execution services and all of the activities that they support for capital markets into sort of that real-time environment. So think about no longer doing it after the fact, but you're doing it actually in the moment as those transactions are happening. And then the last thing I would say is, I don't know, federate the control and then have selective disclosure. What I mean by that is none of this should open a world where everybody sees all of the data and who are making those transactions. I come from the securities financing space, and I can tell you for sure there are no prime brokers and no banks out there that are willing to disclose how they are managing their balance sheet and balancing the checkbook in their own organizations. So you need to think about having a network that allows and preserves the privacy and the sovereign control around the creation of applications and the ability to onboard clients, but have it be that the whole workflow is improved by allowing for the selective disclosure of data and the rights to act on that data to the parties that are entitled based on some form of legal agreement. So I could go on all day, but I'll stop there.
That is awesome. And we're also like approaching crunch time. So one of the last questions for you, and we have to keep it short and punchy. A panel doesn't really constitute being a panel without AI in the mix, so we had to bring up AI. It does play a larger role in the financial data space around analytics, and so what opportunities do you see and what risks do you see around AI and combining on-chain data with AI-driven decision making?
Great question. No, and I might real quick just extend from Kelly's point. I think what I hear you describing, Kelly, is this expansion of the idea of what is a transaction. Because it used to
That's a good
be
way of putting it.
what is a transaction is maybe agreeing to a trade or maybe the final settlement. But I think what we're finding is blockchain allows you to really expand the aperture for all these other things that are actually transactions. Even the origination of a security, say a much less liquid security, is actually just all these different steps you have to go through to get multiple parties to agree that that step is good to go. Those are all transactions,
Yeah.
and they can all be represented statefully on blockchains.
I'm stealing that. I'm going to use that.
There you go. Lots and lots of transactions occurring, and all the data that gets generated on those. AI is, I guess, back to that human in the loop concept. For Tradeweb, we've been talking about and leveraging AI and machine learning for decades now, and both in our pricing as well as in our execution protocols, where increasingly, if it's a fairly small-sized transaction, you want to route that automatically, get it to the right liquidity pools automatically, get the execution done automatically. So we're already seeing AI kind of take over more and more of that. But it's super important that you always have a threshold, that there's no hallucination. This transaction data afterwards looks just as good or better than what you would have gotten before you leverage machine learning and AI. And again, I think that concept of the more you take humans out of the loop, the higher the standard has to be on all these checks you may have to do. And so that's where I think it'll be interesting to see how AI quickly or doesn't, not quickly takes over a lot of the sort of transactions that we see on the platform. We actually think it's going to take a while. We think this is quite a space where the bar is so high already for quality of execution that AI definitely has an impact, but it will happen over time. But that idea that you need the data to be perfect, and you need like a lot of the statefulness of chains and what they offer to safely proceed with how AI can impact what we already do. The bar is actually quite high, and we have to jump over.
Awesome. Kristen.
Okay, so I'm sure, because this is a crypto conference, you have friends who still don't believe in crypto, but they definitely believe in AI. And sometimes when I'm having that argument, I'll say, okay, so if you believe in AI agents being, a thing that everyone will have in the future, what if they need to go buy things for you, even a plane ticket? They need crypto to be able to do that because an AI agent doesn't have a bank account. So I think that is one of those cool things where the AI world and crypto are like crossing over and people are getting it because they're like, oh, I get that. Okay. And we do have a crypto AI index. It's one of my favorites. And then lots of public announcements today, but London Stock Exchange is working with Anthropic, and anyone who's an enterprise data licensee of all of LSEG's data can use the Claude AI agent in our environment. Of course, it's locked down. It's a baby step. It's not on chain, but we will get there. I think it's a great, okay, we're making strides. It's all these little things that somebody might say, it's not quite, what we were hoping for, but you have to start somewhere. And then one last thing on AI. I think it will be really interesting when you take TradFi data, like a PE ratio, and then you combine it with some sort of behavioral finance kind of signal that happens in real time, and that's only enabled with on-chain data that's really quick, and then all of a sudden you're making more precise investment decisions in real time, but you need both pieces, and it kind of comes full circle back to the interoperability, but it's a really exciting time.
Amazing.
I mean, I'm a mathematician, so I've been working with AI for a long time. And I mean, also Deutsche Börse Group, we are, of course, doing this. And I mean, let's break it down to what you just said. I think there are two areas where AI plays a big role. One is really in the area of decision making, of what to trade, when to trade, and how. And then the other one is actually maybe in the area of market surveillance to see that everything works in the risk space, so controlling all of this. But I have to say, if you really think about us as market infrastructure providers, or also market infrastructure on chain to actually do these transactions, many of these are actually process and rule based, and AI will potentially not play the biggest role to actually get this going. It will be the people interacting, let's say on chain, to make the decision to trade, or those that need to control this environment to potentially see if there is some kind of fraud, because I mean there is always something being possible to do in the risk management space, where I see the biggest applications for AI really making sense. And I mean also at Deutsche Börse, I think if you look, there is no difference between TradFi and let's say DeFi in that it all will come to see how performant actually AI systems will be in the future, because latency plays a lot of role, specifically in the central limit order book. And until AI reaches that, it will take some time.
I agree with you. And you have the honor of closing out.
The last word.
The
I'll
last
say
word.
Really quickly. Just in terms of data continuity, maybe I'll just switch gears a little bit and just say, I think as we look forward, what we can expect to see is there'll be trusted synchronization, this idea of unified and shared states and shared ledgers. And ultimately, we're going to get to a state where there's an immediacy, integrity, and privacy of data that allows that data to flow as freely across borders and applications and firms as it does across internal systems now.
Thank you. Thank you. I mean, thanks so much for listening in. We're closing this out now. We could have done another hour. It was a great honor to have you on stage today. Thank you so
very much.
Thank you so much.
Cheers.